Hey, what's good, everybody? Back for our weekly update. If you're not familiar with who we are, we're a retirement investing service that we're trying to also help with your personal finances as well. We'll manage your long-term investments while helping you with your personal finances along the way, help you keep your dough straight. Check us out at jazzwealth.com. Every week on Friday, we come back here and just sort of update our clients and all of you that want to watch how the markets did for the week, as well as for the day, how they finished up. And we'll talk about our investments, see how they are doing. I don't have anything else to really promote or do anything, or any housekeeping, I should say. So we're going to dive right into it. Earnings. Busiest week for earnings. We made it through it, right? Everybody's fine. It was a little bit busy there, but we got through it. Now we have, out of all the companies in the S&P 500 that have reported earnings so far, 79.4% of them came in better than expected. So turning out to be a record earnings season. Really, really, really nice. With that in mind, we'll go over to the charts. We'll talk about how things did today. We got the Dow basically flat. Everything was basically flat today. As far as like a one-day performance, nothing really exciting to write home about. The Dow, as you see on the screen there, was down by 12. S&P 500 actually gained 3 by the end of the day, but it basically hovered flat as well. And the Nasdaq was higher on the day by 1. So one simple point there. The S&P we'll continue to talk about from a technical standpoint. Those of you that like watching the charts, we're basically sloshing around in between these two red lines. Let's see if I can make them bigger. Let's make them a little thicker so we don't confuse them with the 200-day moving average. These two lines, from technical perspective, as well as all the algorithms that trade the markets, they're just waiting for one or the other to go, for the prices to go above one or the other. Doesn't matter if it goes above or below. The next great activity in the market will start when we either go over this line or this line. I hate to say it, it sounds so oversimplified or too simple, but that's really what's going to happen. The next great move for the markets, whether it's higher or lower, will occur once we break there. It does kind of feel like we want to head below it, so I'll plan for the worst, hope for the best in this case. But we'll go through all of our other investments here in just a second. That's the S&P 500 for the day, and the rest of the markets, nothing. The focus remains on economic news and earnings because Washington's pretty quiet, right? So not a whole lot going on there with Washington. I will say that for economic news, the GDP numbers came out this morning better than expected, meaning the overall economy grew by 2.3%. In the first quarter, they were expecting 2%, so we're seeing more growth. We kind of could tell that from the earnings. If you've been following along with the different earnings releases, everybody's pretty happy. So when you see these sort of Washington news events that cause brief spits down or shots higher, you know that's kind of temporary, right? Everybody's focused on growth. The economy, the stock market's focused on how are companies doing. They don't care who cheated on who or whatever happens in Washington or who got fired and replaced. It's how is the stock market doing? How are individual companies performing? So talking about a few of those individual companies, we'll start with Intel because if you've been following us for a couple days here, we've been talking about the chip makers doing really well. AMD, Texas Instruments reported great earnings. Everything's fine there. Intel reported the same. The earnings beat pushed the stock to 17-year highs. Well, that's where it started, right? But didn't quite hold on to that. The company's earnings growth was 32% year over year. I don't know. If you have a business, if you run a business, if you grew by 32% year over year, I think you'd be pretty happy with that. The stock's up about 15% for the year. It did not finish on its highs, though. It actually finished down just a little bit. No problem. I don't think that's too big of a deal. Amazon reporting earnings also. We talked about this yesterday in our update while it was happening. The stock broke out to new highs there. Just a little too far, too fast. That's all this is. Same with Intel as well. The stock just moved a little too far, too fast. It did close higher on the day by 3.6%. Check this out. Their earnings came in 100% higher than what Wall Street had anticipated. So that kind of explains the good start there. Their revenue higher by 43%. This is the 5th straight quarter that they've seen sales growth, right? So you wonder, like, is Amazon growing? What's going on? Great company, obviously. $51 billion they made in a quarter. That's only 3 months. I don't know, I only have 4 fingers on this hand, but that's 3 months. So incredible, right? The thing you want to note here is it's not all sales, right? Amazon Web Services is a huge chunk of their overall profit. It continues to be that way, $5.4 billion to be exact. That is the lion's share of where they make their money. Doesn't matter to investors. They're killing it, so they're happy. Let's move on to Microsoft. Microsoft broke out today. Technical traders love this sort of thing. If you follow charts, it's a little bit rough, right? But the stock broke above these highs. It didn't finish up there. So Microsoft reported earnings. They're doing a great job moving over to the cloud-based sort of offering with their software and things. Earnings were higher by 35%. They've now gotten to a point where all of their revenue that they report, 58% of that comes from the cloud-based services. So it's nice to know that earnings are improving because of the change that they're making. They're really making a big shift over there. And that's pretty good. Technical traders like the breakout. They're not going to like that it didn't close above those highs. No momentum. Usually a stock breaks out, people come to it, they get all excited. Nothing. People didn't get excited about that. Let's talk about our investments this week. REITs. Last couple days, as yields started to take a break there, REITs took off back up to highs again. Anything bond related saw a sharp recovery. Why? Just goes to show how fickle Wall Street is. Beginning of the week, yields were on the rise, broke above 3% on the 10-year. That was a big deal, psychologically speaking. The last couple days, they took a break. They've sort of recovered, and so you see that little pullback here in the price. Now, this is the price you're looking at, so not the yield. I don't think I actually know how to pull that up. But a great sign there. So anything interest rate sensitive in your portfolio finished out pretty good. So let's see what else we got. Tech, sort of choppy for the week, back and forth. That's all earnings related. Everything you're looking at, whether it's semiconductors, financials, things like that, all earnings related, and just kind of, you got to smack one way and then a big move the next day. That'll all start to calm down, and everybody will be sort of getting back to normal here soon. So that's it. Apple was a little lower on the day. They may be getting into the smart glasses thing. I hate what they're doing there at Apple. They got into the watches. I get it. They're making some money off those, but that's not a long-term product. I just don't, I'm not feeling that as a long-term product. And now that they want to get into smart glasses, I think it's a horrible idea unless they buy Magic Leap, which I don't think they would sell at this point. But if you've never heard of a company called Magic Leap, unbelievable. What little information you can find about them, totally cool. I mean, that is, if that works the way they say it is, incredible. Also, the Toronto Stock Exchange today shut down. Technical difficulties, that doesn't affect any of us. Basically not a bad week, right? If you're an investor in anything long-term, we're kind of waiting the clock out. We're going to slosh around here on the charts, as you saw the S&P, until we get above or below that line. I think I made that pretty clear. And that's about it. Earnings-wise, they're pretty quiet. That's it for Friday. Normally, stocks don't report too much for earnings. I think Sprint, is that Sprint coming across now? I don't think that's earnings, though. It's just headlines. So not much there. Questions. We'll take a few questions if you have them. Otherwise, leave them in the comments below. Happy to answer. That's my nightly homework, is to answer any comments we get. Henry says, with North Korean and South Korean coming together, can that help a rally in the stock market? It'll certainly slow down the volatility. It has nothing to do with the overall stock market immediately, but it'll certainly slow down that volatility that we've seen on the charts. That's, if we go back here, this sort of nonsense that you see here, these big up and big down days, that's that sort of news when, oh no, we're going to fight them or they're going to fight us. So it's good news that that's going to calm down. I think all it does is shrink the volatility in the market. Let's go look at volatility. Here's volatility on the charts. Very quiet, not a lot going on. Then all of a sudden, boom, 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 lots of activity. That will start to settle down now. I think we can get some of this geopolitical nonsense out of the way. I gotta watch that guy. I know nothing about him. I've heard some of you mention it is just financial education. I'll check it out. I'd be interested. What about Apple partnering with reputable luxury eyewear company with Oakley to create in-bed glasses products? That's why. Yeah, that's kind of what I was talking about just a minute ago. I don't like the idea. I don't know. I don't buy it. I don't get a good vibe from it. I like the idea. I loved when Google tried it. I would test them. Would you really wear something like that all the time unless it was very conveniently built in? If Apple can figure that out, I mean, if anybody could, it could be them. I just don't like the idea. I just think it's sort of takes away from what they're doing. I don't know. I could be wrong on that one. It's just does nothing for me. Anyways, gonna wrap it up there. Have a great weekend, guys. Next week, if you're a client of Jazz Wealth, next week, I can't say it's gonna be Monday, but next week we're gonna start releasing all of our video series little by little to cover every financial topic you have ever wanted to know anything about. Just the facts, not my opinion, just the facts on everything you should be doing with your money, your investments, your insurance, your risk, you name it. It's coming out next week, so we're gonna get that started. Okay, have a great weekend. See you guys.